Hello, today is Monday, July 20th. Today we'll be talking about the three most common types of networks available to employers when selecting health insurance for their employees. The first network to discuss is the HMO. It stands for Health Maintenance Organization, with the emphasis being on maintenance. The idea was you pay a premium, and every premium you paid, the physician or provider would receive a percent thereof. The purpose was to keep you healthy, hence Health Maintenance Organization. This was well received because you pay a premium, and then for a small copay, the provider was responsible for keeping you healthy. The drawback is you had to select a specific preferred provider, and all of your health care would be funneled through that provider. That person was responsible for the testing, the surgeries, the hospitalizations that would be necessary. You just paid a flat fee, and then you didn't have to worry about anything after that. Next, let's look at the PPO. The PPO stands for Preferred Provider Organization. They were developed in the late 80s and became popular in the 90s. You paid your premium, but you still had your deductible and then co-pays. The Preferred Provider Organization basic was an 80-60. Then they developed the 90-70 plans. This was a positive incentive where if you stayed in network, things were paid out at 90%. If you went out of network, things were paid out at 70%. And then we had the 90-60. The last figure is the percent the insurance company would pay. Now you can see PPOs like an 80-60 or an 80-50. The people who selected the PPO were people who were a little bit more discriminating. They wanted to go to their doctor that was not in the HMO. They wanted the freedom to choose specialists in hospitals and testing facilities and things of that nature. The PPOs gave you a pre-negotiated price. For example, the doctor's charge might be $150, but the PPO said you're in our network, therefore the doctor can only charge $90. The additional $60 was a non-factor. Before we had the HMO and the PPO, we had indemnity-style insurance. That's where everything was subject to the deductible, and then the insurance company paid at 80%, you paid at 20%, until you reached your maximum out of pocket, and it was typically in the $2,000 range. All costs paid by the insurance company were done on what they called the usual and customary rate. And typically that was in the 70 to 80% range. So where would people choose to go? Most young families who were healthy liked the HMO because their costs were fixed and basically a premium. So with the employers, they were happy to go that route. And the HMOs tended to be more expensive, but they gravitated to be a cheaper premium policy. A little bit older people tended to like the PPO as they were being a little bit more discriminating with the doctors that they wanted to go, the hospitals they wanted to go to. And then people were happy to give up the indemnity-style insurance for the PPO because they felt like there was very little sacrifice, and the indemnity-style insurance was the most expensive premium that the insurance companies were charging. So employers started to gravitate toward the PPO, then they gravitated toward the HMO, all for premium savings as cost went up. Today, things are a little bit different from how they were back 10, 15, 20 years ago. The HMOs and the PPOs on paper look very, very similar. In reality, they work very much the same. In the past, if you went out of network with an HMO, there was no coverage, but you didn't have a deductible. Today, HMOs have a deductible and out of pocket, and if you go out of network, there is no coverage. In the past, the PPO, if you went out of network, you had the 20% reduction in benefit, and you were responsible for the difference between the negotiated rate and the amount the insurance company would pay. Today, many PPOs, you still have your deductible, but if you go out of network, there is no coverage. So employers, when you're selecting a health insurance policy, a lot of insurance companies now allow you to purchase more than one type of insurance and network for your employees. It's not uncommon to see an employer have an HMO and a PPO and variations thereof available to its employees. Employees, be careful with what you select. Notice if you have an HMO, there's absolutely without question no coverage out of network. Many PPOs do not provide coverage out of network. Know that. Many of today's PPOs do not extend coverage out of the state of Illinois. So that could be a factor with your children who are going away to college. If you have any questions as to what you have as an employee, please give us a call. We'll be more than happy to go over that with you. Employers, if you're not certain what you have or you're dissatisfied with the current options that your insurance company is giving, please give us a call. We have many, many options available to your employees. Once again, the number for us is on the bottom of the screen. Don't hesitate to give a call. We'll be happy to discuss your insurance with you.